Now, if you're a business coach or you sell some type of training or e-products, there is a tax topic that you need to be aware of, because if you don't understand it, you probably could find yourself into some tax trouble. Now, the topic you need to be aware of, it is called Nexus. Now, I know, Nexus sounds like some crazy, evil computer program from the movie Terminator. And to be honest with you, I'm not sure exactly how they got the name, but it is a true and real tax topic that you need to be aware of. Now, before we dive into what Nexus is, let me just kind of give you an overview of how taxes work. In the U.S., taxes are created at the federal level, which are like the president of the United States, the Congress, the people in Washington, D.C. And then tax law is also created at the state level. So that would be like your governor, your state attorney general level, your state politicians. And then taxes can also be created at the local county level. So you have these three different levels of taxation. Where Nexus becomes a very big topic is at the state level, because there are some laws that went into place a few years ago that allowed each individual state to set rules around when a business or a contractor or a business coach is responsible for collecting sales tax or paying income tax in their state, even if you don't live in that state. Now, for example, let's say you're a business coach and you coach clients via the internet where you're doing business coaching with them, and you live in the state of Texas, but your clients are actually everywhere throughout the country. Well, if you're not mindful of the rules and you're not aware of what's going on, you very well could be responsible for paying taxes or some form of taxes in all of the states where you do business. So it is very important for you to understand this concept. Now, what makes this a little complicated is that when it comes down to Nexus, states are allowed to make their own rules. Now, a lot of states have similar rules or somewhat similar rules, but the rules can be very unique. For example, there are some states that say if you sell more than $100,000 worth of services or products in our state, or you have more than 200 transactions, then a Nexus event is triggered. And then there are some other states that say, well, you'd have to sell more than $500,000 to trigger a Nexus event. And then there are some states like Florida who they haven't quite finished what their rules are. They have some proposed ideas, but they're still working that out. Now, because each state has the right to set their own rules, it's best for you to work with a tax accountant that helps you understand, hey, what is your situation and what is your business and what's your exposure? Because you may be thinking like, all right, Terrell, does this really matter to me? You know what? My sales are not, I don't sell more than $20,000 worth of stuff in any state. And I would say, based on the dollar amount, you may not have a concern. But in some states, it's based on the number of transactions, which means you might actually have a concern. For example, let's say if you sell an ebook and you sell your ebook for, $3. And let's say if you sell, 200 ebooks in a state. Well, dollar-wise, that's only, $600 in sales? But because you have sold more than 200 copies of that ebook in that particular state, you have now triggered a Nexus event in some states based on their rules. So, although you may be like, I don't sell more than $100,000 worth of stuff, you may still trigger a Nexus event because you sell the quantity that meets the rule for that state. So, this is a very complicated topic, and it'll probably take us maybe 3 hours to go through every single detail of it. So let me give you a helpful hint. What can you actually do about this? The first thing I recommend is that you run a sales report that tells you, hey, where have I sold these products? Like, where were the customers located? So run a report that gives you all of your sales by state and by jurisdiction, whatever level of detail you have. So you can see, what do my numbers look like? What was the dollar amount that I sold by state? And what was the number or the quantity that I sold by state? And then the next thing I would say is contact your CPA or your tax accountant and share that data with them to say, hey, here's what my sales data looks like by state. Can you please tell me, do I have a nexus issue as it relates to sales tax and income tax in any of these states? Because you want to make sure that you have all of your bases covered and that you are not leaving yourself open to penalties. Because let's say you've been selling products in the state and you've triggered a nexus event. And let's say, you've sold, let's say, $30,000 worth of products in that state. Well, if that state says that you are responsible for collecting sales tax on all of the items that you sold, then what the state is going to come back and say is, well, our sales tax rate is X% times your $30,000. That's how much money you owe us. And if you did not properly plan for that, that could be a pretty big bill that you didn't expect to pay. So you want to make sure that you understand this as it relates to your coaching and your consulting and your training business.